What are stocks? Stocks, also known as shares or equities, represent ownership in a company. When you buy a stock, you are essentially buying a small piece of the company. Companies issue stocks to raise money for various purposes, such as expanding their business, investing in research and development, or paying off debt. The value of a stock is determined by the market forces of supply and demand. If there is high demand for a stock and limited supply, the price of the stock will go up. Conversely, if there is low demand and high supply, the price of the stock will go down. Stocks can be traded on stock exchanges, such as the New York Stock Exchange, NYSE, or the Nasdaq. Investors can buy and sell stocks through a stockbroker or online brokerage platform. When you buy a stock, you become a shareholder of the company, which means you have a stake in the company's success and may be entitled to receive dividends or a share of the company's profits. Investing in stocks can be a way to grow your wealth over time, but it is also a form of risk. The value of a stock can fluctuate significantly, and there is no guarantee that you will make a profit. Additionally, investing in individual stocks requires research and analysis to make informed decisions. Many investors choose to diversify their portfolio by investing in a mix of stocks, bonds, and other assets to minimize risk. Types of stocks. There are several types of stocks, including common stocks. These are the most common type of stock and represent ownership in a company. Common stockholders have the right to vote on corporate matters and receive dividends. Preferred stocks. These stocks are a hybrid of stock and bond investments. They typically pay a fixed dividend and have a higher claim on company assets than common stocks in the event of bankruptcy. Blue chip stocks. These are stocks of large, well-established companies with a strong track record of stable earnings and dividends. Growth stocks. These stocks are of companies that are expected to grow at a faster rate than the overall market but may not pay a dividend. Value stocks. These stocks are considered undervalued by the market and are often stocks of companies that are temporarily out of favor or have been overlooked by investors. Penny stocks. These are stocks of small companies with a low market capitalization, typically trading below $5 per share. Cyclical stocks. These stocks are of companies whose earnings and stock prices tend to rise and fall with the business cycle, such as those in the consumer discretionary, energy, and materials sectors. Defensive stocks. These are stocks of companies that tend to perform well during economic downturns, such as those in the healthcare, utilities, and consumer staples sectors. Where and how can I buy shares? Buying shares, also known as investing in the stock market, can be done through a variety of ways. Here are a few options. Brokerage account. You can open a brokerage account with a brokerage firm, which will allow you to buy and sell shares online or through a broker. Examples of brokerage firms include Charles Schwab, E-Trade, and Fidelity. Direct stock purchase plans, DSPPs. Some companies offer direct stock purchase plans that allow you to purchase shares directly from the company without going through a broker. This is a good option if you're interested in investing in a specific company. Exchange-traded funds, ETFs. ETFs are funds that own a basket of stocks, providing a diversified portfolio. You can buy ETF shares on a stock exchange like you would buy individual stocks. Index funds. Like ETFs, index funds offer a diversified portfolio of stocks. Index funds track a specific market index, like the S&P 500, and can be bought through a brokerage account. To buy shares, you'll typically need to have a brokerage account set up with money available to invest. From there, you can search for the stock you want to buy and place a buy order through your broker's website or app. The price you pay for the shares will depend on the current market price and the amount you want to invest. It's important to do your research and understand the risks involved in investing before buying shares.